Okay, this is the same rental property I'm interested in. So this one is, it's the same one with the previous video I made. Previous video, it's made all the information you have here. The previous video I made is on the rental income. The income was consistent for 5 years. The monthly rent is $2,500 per month for 5 years consistent. But for reality, usually, as the inflation go up, so usually, you will increase the rent every year. So in this video, I'm gonna talk about, say, if you want to invest, you want to buy this condo today, then you want to rent it out. Then for 5 years, then you sell at this price. For within this 5 years, the beginning rent, the first year rent is $2,500 per month. Then you every year, the monthly rent you increase by $50 per month, which means the means is let's just say the year one your monthly rent is $2,500 per month. The year two is $2,550 per month. So each year increase $50. Third year is $2,600. Fourth year is $2,650. Then year 5 is $2,700 per month. So let's just say assume the cost is stay the same. So assume the monthly cost stay the same. So which means the monthly rent minus the cost give you net income. So this net income will automatically increase $50 per month for 5 years. Okay, in this situation, so you want to find out the what's the monthly what's the annual return? What's the annual return for this rental property? So in the previous video, if you assume your monthly rent stay the same, so in that case you calculate the annual return. If the monthly rent stay the same, your annual interest return, which is 13.8%. Now you can increase your rent every year this much. So in this situation, what's the annual return, right? You want to find out what's the annual return. Well, because you increase the rent, so annual return definitely higher than 13.8%. But exactly how much is it? So okay, we do a timeline. I know it's a little bit not very pretty, but I'm trying to explain this. Hope you can see everything. Okay. Hope you can see. Can you see everything? Okay. I'm just gonna do this. Should I do this so then you can see? Okay. See everything? Okay. Yes, so if you see the timeline from year 0 till the year 5, so total is 60 months. Every 12 months, all the 12 months, the monthly rent are the same. But for the next 12 months, the monthly rent will increase, then which is give your net cash flow will increase as well. So this you cannot use simply use time value or money calculation. You have to use the cash flow because your periodic income is different now, so you need to use cash flow rather than cash flow and RIA, internal rate of return, rather than use the times value of money, the simple the annuity calculation. So anyway, so I'm gonna show you how to do that. Okay, clear everything. You need to use the cash flow. I have to clean everything here. No, it's clean. Okay, this is everything clean. Everything is clean now, so this have to use cash flow. Okay, so at the beginning is your cash outflow, which is your initial investment is 87,980 is cash outflow. Then press enter. Then for the first cash flow is 321. Enter. Total is how many? It's for 12 months. So we call this 12 month. 12 of the 321. So this is enter. Then for the second one is 371. Enter is for 12 as well. Enter. Then for the third one is 421. Enter. Then is for 12. Enter. Then for the fourth one is 471. Enter. Then is 12 as well. Okay. For the fourth one is 521. Enter. Then you have for the fifth one, because we have to include everything else when you sell the house, then you have a cash inflow, so you have to include this one in the last month. So we leave the last month out, we plus the last month the rent income to all the sales proceeds. So which means we do 11 months. This one is 11 rather than 12. Enter. Then for those 6 this cash flow is how much is it? Let's do is it total when you sell the condo, then you have to pay off your mortgage balance. Then you have to pay all the commissions and the fees. So then you have a net proceeds is this much. Then you have to add this last month's net income. It's 147 375 add 521 equal to is 147,896. Enter. That because this is only one, so okay, so this is the this is all the cash flow inside of it. Then what do we want to find? We want to find the rate. What's the say my initial investment is this, then I receive all this cash flow, and I receive this net proceed. So what is my return, right? So that's the thing you want to find out. This is use RIA. Internal rate of return is because your future, all those income discount to the present, your present is equal to the present value, which is that present value is equal to 0 in this situation, that return is your internal rate of return. So you compute. This give you monthly because you do months. Then you have to times 12 is 14.7. Is total is 14.75%. 14.75%. This case is 14.75%. So this one is 14.7 is higher than the 13.8%. So which means to tell you if you increase your rent months every year by $50, so your annual return will increase about 1%, right? 1% annual. This is annual return. Okay, so that is how you calculate your return when you increase your rent.